After gapping down about 2% off the open, we finished with a piercing pattern. We're going to adjust this and talk about it in details. There's a bunch to go over here. I think the most important thing is this. Nikkei gapping down almost 4% on the day and then reversing, which is really very powerful. But also South Korea out there coming out and saying them and China are going to form this tariff bloc. Now, what's so fascinating about that is it was taken as a bad thing. It's actually being seen as like, oh, okay, so you guys are going to come together, come up with a solution, and then we'll be able to deal with it from there. So it actually started becoming a positive later in the day. I do think the tariffs and coming up to that April 2nd is going to be a big deal. Make sure you subscribe to the channel, click all notifications. 27.5% of you do not that watch this. I do think that this is interesting though. You have an H, you have a failed H. You needed to retest. You just did, you held. Is that the bottom? That's the big question everyone's asking. I'm going to tell you the answer that every single person should tell you. They don't know. I don't know either. Nobody knows. Here's what you do know. You do know that you tested and you held. And everybody would say, well, this was easy. It was that level. There was nothing easy about today. So if you struggled with today, welcome to the party. Everybody did. That's the level. There's the test. I can sit here and be a jerk and say, oh, look, there's your morning star. And this was so super easy. The bottom line with it is when you're looking at a bar like this, gapping down, and you're watching the dollar plummet and you're watching other exchanges going out there plummeting, and you're seeing this and the failures and the retest, and then you can't get over. There was nothing easy about this day. So give yourself some grace today for trading. What I would say is that this was systematic buying and unwinding of hedges all day long. And you can see that here. And you can also see that in the way that the VIX just absolutely imploded. What's fascinating to me is that when you see this doji here, right up here at 945, and you just kind of go back to the S&P around the same time, you'll see that doji right there as well. It's literally like looking at an enantiomer in the mirror for those that had OChem. But anyway, so when you start to see this stuff and you pay attention to it, you're like, oh, okay, then we got through the gap fill. Well, once you're through that gap fill, you start getting into those piercing patterns. Now, piercing pattern is when you gap down. You don't expect to get through the previous open. You expect to reject. You got right through it. So you undercut here. After the undercut, you ripped through it. Here's how I would view this. This was grossly oversold. And if you're in the community, we talked about it today. And this reading down here was like a 12 or a 15 on the SPY itself. I think it was a 13 or something. And then we went through it. Maybe it was on the Qs, but we went through this and we just were marking them off. Yeah, it was on the Qs. And we went through this and we were just marking them off and going, what happens every time that we've gotten to like a 13 an hour later? And there's very few things to say about it except that after about an hour or two, you end up going higher. So we knew not to short. And really that 13 was the number. Like it's not telling you that we're going to go up and everything's fine. But what it's telling you is, hey, this is a really low reading. And the past 4 or 5 times this happened, we went about 2% higher before rolling back over. So are we going to go 2% higher and then roll back over? Did that already happen? Well, here's the first thing I would say. We got through this level. Now, that's not the cat's pajamas. That's not the big level, but it's a start that we got through that. And then we would come here and look at this gap that we went through like butter and realize that that's a big level for us to get through as well. But we're oversold and we bounced and we're back over neutral. And I'm going to just go to the 4-hour on this. This is where you are in the Qs. So you went back down. So again, I use RSI. You don't have to. But I have a really big divergence here. And am I saying it's the bottom? No. Do you know why I'm not saying it's the bottom? Because nobody knows. So this is what we have, and I can only tell you what we have, and then from what we have, we can go from there. I will tell you this. If you're sitting here using moving averages and stuff like that, you're going to miss this. And that's really where it gets into it. There comes a time where you have to figure out and quantify your risk and put on trades. And I'm just going to tell you, I put on a bunch of stuff. It wasn't all tack. And the reason for that was there's a time to try, and if it rolls right back over, then it rolls right back over. We all know the data. We all know what's going on out there. We all know that the SOX looks like this and it looks god awful, right? But if we look at the SOX versus looking at the Qs, well, there's definitely a differentiation there, don't you think? I think there is. And these kinds of moves, they mark bottoms. You might not think so, but I remember posting this one on 22. I think I never got so much hate mail. That's how I kind of thought it would work. But you see the divergence right here. They came out with that hot CPI number. And everyone's like, oh, the inflation, it's going to go on forever. It's going to be like the 80s. We're going to have 22% interest rates. It's going to be awful. And yeah, that was the bottom. And then, of course, what we'll hear is, well, that's not there on the weekly, so it can't be the bottom. And I'm going to reiterate once again that I have stated that I don't know if it's the bottom. What I am simply saying that when I look at a 4-hour chart, I have a divergence here and it's started. You can do with that what you want. It doesn't matter to me. But I can only tell you what I'm looking at and what I see. I'm very surprised by this. I'm not going to sugarcoat it. Really surprised, expected to see follow through, and instead we had systematic buying that kicked in at 2 o'clock. Me and my tinfoil hat thought they were just playing games, so I decided to go out there and put a couple shorts on. They didn't work. They went the other way. So I closed them and then I put some longs on and they obviously did work. The issue here is if you struggle today, a lot of people are going to struggle with a day like today. If you're looking at this and trading the index in and of itself, it was a pretty easy day to trade the index or to trade if you're trading futures. I get that. To go out there and look at individual names, I don't think this was easy. I don't think many people were looking at something like an NVDA and going, I wonder what the 4-hour RSI is going to shape up like. But that's exactly what you needed to do today on some of these things. And we're seeing that pretty clearly. I can't think of anything else than a day where Tesla should have broken 230. And instead, the exact opposite. Now, the 4 hours a little extended there. You have deliveries out there and with people, keying the cars and, maybe they sold one car. I can't imagine that the expectations are going to be that high right now for them. So I think this is kind of interesting. And here we'll see what they do with deliveries. But we have some ISM data that's going to come out and we'll go from there. Let's take a look at the financials so you can see what's going on there before we get into up volume, down volume. So what happened on the hourly with the financials today? Just outright buying. Just outright buying every single bar, outright buying. You sit there and you look at JP Morgan, you go out there, what happened? Outright buying, Goldman, all day long. And I think that this is really important to understand that these dips are now being bought. And people are going to say, well, how long is that going to go on for? You don't know. What you do know is that you rallied. You had every reason. Give me a reason that we bounced today besides someone's going to say it's the collar and it's the options and it's you came to the same exact level. You bounced. You rallied up, you worked it off, and you retest. That's all you know right now. And other than that, stop coming up with reasons that just very simply don't exist because Freddy Fingers on Twitter told you. Watch your levels and then kind of go from there and see how it goes. You'll be much better off doing it that way. Again, I am very surprised by this. There were some other things out there that were really interesting. I'm long this Poland ETF. Very surprised at the way that it reversed today, considering the way that the DAX sold down and what's going on out there. But I think that's more automotive. Here's the issue, and I might as well get into it while we're looking at some of these before we start pulling up some charts. Here's the bigger issue. Does anyone know what's not going to happen on April 2nd? And I think that's kind of where we're going here. So I'm just going to mark this off for a second so you can see some. So in front of us is up volume divided by total volume. I really don't care how you do this. You could do it up volume divided by down volume minus total volume. I really don't care. Do whatever way makes you happy. But what you're trying to do is look at the up volume on a percentage basis of total volume on the day. And what you're going to see are these levels here. And if we just kind of look at these and just start marking them off and you go to these dates, and you look at that's like December 18th, and then you'd go here and go, that's August 5th. Way cooler if it worked. And then you go April 15th, and you'll note these dates and where you're at. I mean, we can do one more, but we're not going to do all of them. February 13th, we're going to do that one now. But February 13th, April, you should know these dates and you should remember what happened on those days. But just in case you didn't, if you look at a chart here, and we'll clean up all my levels for a second. Yep, let's clean them all off. Let's get rid of this. And let's just drop this down and go, okay, well, where are we with this? And again, no one's going to ring a bell, but there's April 5th, and then, August 5th, and then here's April 18th, and then here's where we are now. And then we just kind of start going through them all, and then you go, okay, well, where's that? The February one, I think is like it was right here, correct? Wasn't that it? Right, or this one, I think it was that February 13th. Let's go take a look at it again. So I love February 13th. Let's go back to it and let's click on that one too. Nope, there you are. Yay. So when we start to see these areas, does that mean that we're never going to go down again? No, of course you are. Does that mean that everything's fine and that we don't have to worry about tariffs or earnings? No. What you're looking at is a technical indicator that is telling you right now that we have a similar situation. That's what's happened before. And that has led to a bounce. Do with that what you will. I know what I'm going to do with it. If I look at up volume versus down volume, I thought this was fascinating. And what I try to do is just get different views of this. But if I mark off that level right here, cool if you worked. There we go. Not going to have time to edit this. You're going to have to listen to my blunders. I should make like a blunder. But if we look at up volume divided by down volume, and we look at this the same exact way, well, here you are again, December 18th, August 5th. You can see it's hit here a couple more times than the other data. So is this something that we want to give the same credence to? Maybe not. but I just thought it was an interesting way to look at it. It seems like the up volume divided by total volume is giving us a better indication of when to look at this and when not to look at this. And then, of course, you can see up here, March 14th kind of dates, and then you would kind of go look at your chart here and go, oh, well, what happened on, March 14th? And then you'd say, well, kind of in here. Oh, okay. So it's giving you a story. It's just up to you whether or not you want to listen to it. Now, before we get into the breadth and everything along those lines, I think there's a couple key things that we should just talk about. For example, if we look at something like NMAX coming out at 10 IPO price, and then it opens at 15, 14, 13, whatever the heck it opened at, and then just rips. Kind of interesting day, to say the least, to see this happen, but very clear that people wanted in this for whatever reason. If you look at this from the 11 o'clock open, all the way out to here to 65. I mean, first hour, you got up to 80, 75, and it's still trading. Look at where you are. It's absolutely crazy. Watch the volume on this. Like, what was the big rush that you had to own it at the end of the day? I mean, it's just absolutely insane to me how it did, but it was just an absolute monster of a trade, and it did exceptionally well. So certainly something to pay attention to, certainly something that people, I'm sure, in the community trade today. I didn't. I was busy with a bunch of other names. But when you start to see this stuff, like, it's telling you a story. Like, if you were going to have a bad IPO market, I get it. The core weave's interesting to me because it broke, and they really seem to be shoving this thing out the door. I'm wondering if they had to shove it out the door because they needed to get it done because they know that things are slowing. But then the question becomes, how much is built into this market based upon it slowing? I don't think a lot. I think if we really started to slow, the market goes a lot lower. But that doesn't mean that you can't bounce. And I think that that's really the discrepancy that people have to adjust here. And that's what we always talk about. Like, what I try to get out to people is understanding the stool, where you look at the macro side of it, the fundamental side, and the technical side. And when you look at the technicals, what's really changed here on the technicals are really the story. I mean, Nikkei selling down over something that we've all known about, I don't think is the biggest deal. But from this drop from 5,800 down to 54, right, 54.80, something along those lines, I think that's the story. I mean, I really do. I think that's the story that you kind of have to focus on, right? I mean, there's another 5% there. And did anything fundamentally change? Well, we got that Michigan consumer sentiment, so we know that that's bad. What do we have this week? We have ISM. We know that's going to something we have to watch. We start getting the ISM data tomorrow. We get ADP this week, and then we have non-farm payrolls on Friday. Tesla delivery sales. So we have some things out there that can move us. Now, I want to be really clear so we're all on the same page here. I don't know if we bottomed, and nobody does. So, because I saw a bunch of people, funny, someone sent me a thing from Kramer saying today's a really dumb day to buy. You have no idea when is the right day or the wrong day to buy. You just never know. And obviously what he does is just more for comedy to get people to tweet his stuff. But left, head, right, and I'm sure people figured that out by now. He just says things so that he can just get more, attention. It's hard to look at this and to think it's over. I mean, I'm just being blunt. Like, it's really hard to look at this and just say, okay, everything's going to be great. We're just going to rally back up. I would go on the premise of if you're trying to pick up what I'm putting down, because then I get these questions a lot. I look at this and say, it's very difficult for me to see a 4-hour oversold on the SOX and not see some kind of bounce. And what I always do is go back and look at this and go, well, did we bounce in here? Yes. How about in here? Yes. Did we bounce when we hit it there? Yes. There's always a bounce. Like, not maybe, but always when it gets here, it bounces. And it doesn't mean, remember, it's a 4-hour chart, guys. It's not a 5-minute chart. So when your zero-dated options go to zero tomorrow on the SOX, please don't DM me or email me saying, but you said. I'm just saying that you're oversold here and you're due for a bounce. That could lead to, maybe a trough valuation down the line, but I just don't see that. I guess my whole thing that I want to get behind me with the dollar before we go to the breath and everything is I really need to see us get out of this and see what we do after our Independence Day, which is coming. If you're in the U.S. and you're listening to this, apparently Independence Day is April 2nd now. So we get to listen to that, and that's sarcasm. But we get to listen to this and see what happens. But I don't think anything's going to change. Unless he comes out, there's a rumor of a global tariff policy, and I just think that's wishful thinking. 425 here on the TNX, and I think we're fine there. Let's get to the breath, and then we'll go through a couple things that I thought that really stuck out here really quickly. And again, I'm not going to have time. More issues with this thing ever since it started. So whenever this thing's ready to work. All right, I put you on pause for a second. I spared you that one. That one was brutal. So if we can see this, all right, you see the little left. We went through this. We looked at the RSI. We could look at MACD and things like that. But what do we have? Well, we are still under the 50 here. So we're not out of the woods. The 50, and that's on the 200 stocks above, are still under 50. All right, here you are, 39% on the 50-day. Are you above 50? No. So long term, this isn't great. The only thing that you could see that was net positive really out there was 51 out here. And this happened on Monday, and that 51 is on the 20. I'll take it. And what I really like about this, and why I do think that you might be setting up for some kind of bounce, and please listen to those words before everyone tells me that we haven't bottomed and that we're still going to roll over. Please listen to the words. So, even if you think it's a bear market, you still rally in bear markets. You guys get that, right? So, and I don't think we're in a bear market. But if you look at this, you moved on the 5, but you didn't rip. Like, when we had these corrections before, you can see these corrections here where we ripped on the 5, like you got over 60% or something, and then you rolled. The 5 hardly moved, which usually means there's more behind this, and I think that's a very important thing to look at. Now, one of the things I use a lot in determining if we are near a bounce point versus a bottom is I look at the MACD histogram, and I'm just not going to get into all this. I'll do it when we do another live, but really what I'm focused on is the turn. I will do it on an hourly, and I'll also do it on a 4-hour. 4 hours a little stronger. And really what I'm looking for are the color change. So, and I don't really look at the green as much as I just look at the red. So you see how this color changed right here on Tuesday, and then we flipped, right? And then if you look at that, how you put in a bottom, and then we rallied, and you can say, oh, well, we came back down. I got it. But what happened after that? We went higher. So you retested the area, and then you ripped. Why? Because it's telling you what's going on internally with MACD. I'm not going to walk you through the equation of MACD for time's sake, but what I am going to do, but wait, there's more. So I'm going to go here, and I'm going to click on Keep Drawing. I just want to show you something, and then you can spend some time with this, and you can have a little fun, and you can go back and look at some of these. All of them, I'm just going to mark the big ones, and then you can say, was there something there? Did it make a difference? Was there something to these bottoms? Did we wind up going sideways when this happened? And you can do what you want with that, but I mean, anybody should be able to see that, yeah, when this starts to flip like this, which you just did, yeah, you can go higher. You can put a bottom in. And all I did really here was just go back to October 24. And again, what I would do is then look at this and say, let's go take a look at the Qs and do the same thing. And all I've done is I haven't changed the histogram. I use the same exact histogram, and I'm just looking at it. Go look at the Qs. Go do the same exact thing. Let's get rid of the pre and the post for a second. And then what you'd see here on the 4-hour is I don't have that yet. So that means that tech might have a little bit more downside, or at least I have to see what the first 4-hour is. But you can see the flip there, and we're not going to mark all of them off. But you can see this. Okay, that's it. But you can see this right here. And let's get rid of this there. And you can see those levels. And then you can see this level right in here as well. And we can just keep going over and over with it. Now, did it mean that you put in a bottom? No, you took out a bottom. How long did it last? Well, from this one, from Jan 6th to here, 13. That lasted 3-4 days, and within a week you were back down. That's what I'm talking about here. I'm talking about, hey, maybe we're going to rally to some level, and then from there we're going to have to figure out what we're going to be when we grow up. And maybe that level is going to tie directly in with, I don't know, the election date, which is exactly where we stopped last time, and then we'll start basing.